Hey, Alex Nunez here, your farmer's insurance agent. I had this quick video message that I wanted to leave you. I wanted to actually show you something that I'm doing for my clients to help them save money on their insurance premiums with this little known method called a deductible savings account. Okay, so let me go through this real quick. It's actually quite simple, but it's something that you're going to thank me later that I've spent the time to actually show you how this works. Now, the deductible savings account is something simple that I can help you set up. And the mechanism and the way it is meant to work is it saves you money on your insurance over time by transferring money that you're spending on your insurance into a savings account and allowing that account to grow and compound over time. Let me explain a little bit more about how that works. Okay, so basically, this is really more applicable to households that are spending over $3,000 a year or so, about $250 a month on insurance. Now, depending on your deductible level, it'll basically allow me to help you kind of save money and move some of that savings into an account that helps you again compound your money and become really your own insurer in a sense, and you're kind of insuring yourself in an interesting way. So just bear with me again. Just take the time to really understand this concept, because if you're anything like me, you kind of like to be a little bit savvy with your money and you don't want it to just kind of go to waste. So here's a way that it can compound and grow over time with this just very simple strategy. Okay, so let me go right into it. Okay, so the first step that I would take is I would review the account, your specific situation, your breakdown of how you're spending your money with us or with in your insurance accounts. Okay, so if you're spending over $3,000 a year on insurance, the results may vary depending on how much you're spending, but this is just a scenario and an illustration of how this can work for a household spending around $3,000 a year. Okay, so on average, if you were at a 500 deductible already, and we raise your deductible to 1,000, you could save about 400 a year. Okay, that's $33 a month. Okay, so let me show you this strategy. Okay, so what if we started a deductible savings account and we had money that you're saving on insurance go into that account, and as that money grows, you earmark that account to pay your deductible depending on your deductible. So as that money grows, you can increase your deductible, right? So if we put some money that you're saving on insurance into a deductible savings account that I can help you open up, but if you do that, as that account grows, you can increase your deductible, therefore increasing your savings, increasing your contribution into your deductible account, and it's a compound effect. Now, statistically, every household experiences about 2 to 3 car accidents in the span of their household. Now, home insurance, it could be maybe one time over the many years, but that one claim could be extremely devastating, right? Your deductible, yet if you have a low deductible, you're paying that cost of that low deductible over a long period of time, right? Now, if it's kind of like a gamble, like what if you could increase your deductible and save money, right? And a lot of times we're thinking like, man, I don't want to do that because, if I do get a claim, I don't want to pay that high deductible, right? Well, let me do it this way. If we set up an account where you had the money to pay down your deductible and you would be more willing to have a higher deductible, save money, knowing that the savings you're putting towards your deductible account, and worst case scenario, if you did have a claim, you would take it out of your deductible account and then, pay it off. And if you don't have enough money in your deductible accounts left, then you can lower your deductible back down. So let me illustrate this for you a little bit more in detail. So let's say in this scenario, you want to set up a deductible account. Okay, so look at my screen. Okay, you're already looking at my screen, but let's check this out. So I would recommend starting your deductible account just for the first year only, right? At $100 a month, right? So the first time setting up the account, $100. Then monthly contribution at 100. Okay. So you're going to do this for 1 year. So 12 months. And the estimated interest on this, that the account that we'll set up is going to set it at a conservative rate of only 6% returns. Okay. Now the variable rate on that will be 2%. So meaning it could be lower or higher than 6%. So now if you're going to be setting up this account, it's very easy, but after a year, if you know any kind of math, you'll have about $1,300, okay, with, again, the interest you're earning on the money as well. So you have about $1,300. So after that first year, we meet and we decide, okay, great, I got $1,300 in my deductible account. Let's go ahead and make that move. Let's raise my deductible to 1,000. Okay, so on average, a household that's earning or that's spending $3,000 a year on insurance can save $400 a year if they just raise their deductible. Okay. So now we're saying, hey, I feel good. I got this money set aside. If I have to, use my deductible or I have to pay a deductible, I have the money right here. No big deal. Let's go ahead and increase my deductible to 1,000. Great. Now you're saving $33 a month. Okay. Now we're going to stop paying $100. Okay. And the second year, we're going to start doing 33. Oh, well, we're actually starting this account, right? Because you ended this account at 1,339. So we're going to put that in there, 1,239, and then your monthly contribution is going to be $33. Okay, so after the first, so we're going to do this for another 2 years. Okay. So 2 years at $33, basically no money out of your pocket. This is pure savings now. So this is just pure savings. You're putting into this deductible savings account, okay? At the same conservative rate of returns. After the next 2 years, which is basically a total of 3 years you've had this account, you now have $2,300 in this account. Okay, great. So now we're looking at $2,500. Now you got to bear with me because this is some exciting stuff. Okay, so after 3 years, you got $2,300. Now you feel, okay, you know what? I feel more comfortable. Let's go ahead and raise my deductible to $2,500 and increase my contribution into my deductible account to $70 now, okay? Because your total savings is now at $70, okay? So let's look at this. You got $33. Boom. Now we are starting our account at $23.48. So $23.48. So that's our current investment is starting out at $23.38, okay? So for this at this new phase of investment. So now we're going to go ahead and do this for, let's do this for another 3 years. Okay. So again, no additional money out of your pocket. You're just putting your savings, the amount you're saving into this account. We're going to do it for 3 years and see what we're at now. Okay. So after this 3 year period of time, you are now at $5,500 a month, or sorry, a year. You're at $5,500 for this account. Okay. So where does that put you? Well, you have a choice here. You can either raise your deductible again, or you can just keep going, and in this scenario, let's just say, you feel comfortable raising it to 5,000 on some of your accounts. And now you're going to increase your contribution to $87. Now, in this scenario, I don't know. I don't think I would. I'm doing $70. I have $2,500 deductible. Why increase it to 5,000? In some cases, if you're paying more, you increase it to 5,000. You could be saving a lot more and might be more worth it for you. But in this scenario, I'm not even going to raise it again. I'm just going to keep it at 25. Okay, great. So then I'm going to go ahead and go to. I'm just going to keep this going for another 10 years. Okay, so for another 10 years. I'm gonna start out at about 5,500. Okay, so my balance is now at 5,500, and I'm just gonna keep I'm not gonna raise my deductible. I'm just gonna keep the savings of raising it initially to 2,500 right here, and I'm just gonna keep it at 70. for another 10 years. And let's see where I'm at. All right, so after 10 years, I'm at $21,000. Now, let me put that into perspective here. You're at $21,000, okay? And that is after that's your savings. Now, your first year, you put what? $100 a month. You put $1,200 of your own money, okay? Now, this is all your money, but remember, some of this money could be going to insurance or it could be going into a deductible savings account, okay? It's really up to you. And I've showed the strategy to a lot of families, and some of them click, some of them don't. It's kind of one of those things, you set it and forget it. You don't really have to put a lot of money. You don't even have to start it with $100 a month. But the idea, if you think about it, if you have an account that you didn't even know, like you weren't even, it's just the money you're putting, that you're saving on insurance, you're putting in there, and you're using it to strategize with your saving money on insurance. I mean, that's a brilliant idea, right? So now you can reach out to Liza at my office or any of my staff and ask for an appointment with me to discuss how deductible savings account could apply to you and your account, and we can discuss if this is something that might be right for you. Now, you might think, I'm insurance licensed, but what you might not know is I'm also a registered representative with FINRA. Okay, and FINRA, if you don't know, is a like insurance companies have the Department of Insurance to regulate them. FINRA regulates the financial industry. Okay, so it's a government authorized non-profit organization that oversees really the financial industry. Okay, so if anybody's talking to you about financial products, they need to be registered with them. So how to check if somebody's registered with FINRA is, now I don't work with FINRA. You just have to be registered to FINRA, and that's for accountability purposes, right? So if I go to FINRA here, then you just, at the top, you click on broker check, and then you would just type in the rep's name. So in this case, you're talking to me, so Alex Nunez, and search, and that would be me. Okay, so you just make sure that they're active, they're on there, and there you go. Okay, so in this case, that's my address, and you guys know me. I'm your agent, and I'm right here in my office is in San Fernando. So there you go. So anyways, I just wanted to welcome you to meet with me. I appreciate your time, and I hope this was something valuable. If anything, you learned something. Now think about your friends and anybody that is spending a lot on insurance. This is an interesting strategy where you can take your savings in your own hands and use that savings to create a rainy day fund or a other use account, right? In the beginning, it's a deductible account, but this can transfer to another use. Anyways, let me know if you have any questions. Look forward to hearing from you, and hope you're having a blessed day.